right, hello everyone. How's everybody doing today? Good? All right, so like I said, keep the emails coming. We will definitely be letting you know very shortly. So if you want to know anything more about it, just continue with the emails, tradingwithjasmine@gmail.com. And I do see all the other side comments that you put in too as well. And we try to answer all of you. We do answer all of you, so not try. Okay. But let us get started with today. And definitely on Thursday, we'll let you know even more. So like I said, just continue to email in or follow social media. Do both. That'll be best. All right. Support is here too as well. And let us get into today. All right, so for today, you can see as we get into the chart, so we're not quite on the chart yet, but we're going to stick on this slide for a little bit and talk about what has been going on. You can see that we have turned at our fresh supply and demand levels inside the equity markets. And once we go into the charts, we'll see that we hit the fresh supplies, then came down into demand, and we rallied, and now we are right in between, hitting some of our in-between zones, but you can see it gets a little bit tougher now. And what starts to happen is the supply and demand imbalance is not there anymore, and that's when it gets in the middle and becomes very tough. We will take a look at that as well as the dollar completely in a range, just within our 60-minute areas, and that has not changed whatsoever, even with any of this news overnight with Germany and the ECB and the Aussie rate statement. I mean, everything, nothing has changed what the dollar has really been doing. Yesterday, we did have a long bias in equities, mainly because if you remember when we switched to the bonds, there was a pretty good look at the bonds trying to hold supply, and then it actually started to drop out. And that's when I said you got to be careful with the shorts. Very close, because we did drop pretty much on the equity side. And so we did have some close areas, but the close areas you had to be extremely careful because of that reason that we are starting to see our inverses turn, which we haven't seen in a while. So we will look at all of this on the charts and let us get into it. Yeah, for the news, I used to have a specific service, but what I've noticed with that is these days there's just so much free stuff out there. And what happens is when you get a subscription, because you're paying for it, you kind of not forced to, but you try to listen to only them just because you're paying for it. But what I realize is that there's, because between all the social media and all just the competition in general, it's become such a place where people are fighting for space that they try to get you out whatever you can. So what I usually try to do is I look at as many things as I can while I'm charting and trading in the morning, so that I can get a good grasp as I come into the early morning of what's going on. So it's a general, not one specific not one specific place. I take it from all areas. What I think I've become good at through the years is that I know what to filter out, and I know what to keep in my head for something that's important. Because I do believe fundamentally things have to move in certain ways because of how it's how things have to be in the long run. However, to trade fundamentals in the short run, that's what makes things difficult, right? Because a lot of times news tries to fake you out initially. So you need to kind of judge what is relevant at the moment, and then keep in your head what is going to, where the eventual places that it's going to, if it is going to be long equities or short bonds or stuff, eventually things are going to move in that direction. But a lot of times when the news first hits to you, that's not where that initial move is, because what happens is they know everybody's, we're usually the last ones to know. You may think, okay, I get the news first. No, you don't. You're usually the last person to know. So you have to be careful on trying to trade that emotion initially. If you're at great supply and demand levels, yes, then you could absolutely trade it. But when if it's a news that's been out for a little bit, like it's already been an hour or two even, you got to be careful with that to try to follow that. But eventually, it goes in that direction. But let's take a look at this S&P. So we've continued to rally off of the weekly zone, and then we moved up into our 60-minute demand. And we started to continue to rally out of there. Now you can see that we did come into the 60-minute supply level overnight. And I circled here, but we already hit there already, which is the overnight demand that it had formed. So now what happens is it does become very, very not a great supply and demand imbalance right now, because if you take a look at it, we've fallen from the top to the bottom, where then we now came up into the middle, came down here, and now we're back up there again. So you can just take a look at the picture, right? A lot of times I think people come in and they just look at this. I did that a lot when I first started. First of all, your chart's like this big. And then this is all you see. Then you're trying to look for, trading somewhere inside of here. Meanwhile, you don't know that this is the picture that you have. So this is telling you to be a little bit more conservative, a little bit, take down the size in your trading in the middle here. You can completely just wait, or if you really need to trade because, you're a day trader, you need to trade to take down the size, right? Your size should be greater on the extremes and then smaller in the middle, okay? So now you can see up above what we do have is on a move higher, it's going to take us up in to this retested zone. You can see we just barely touched it once. Again, everything is right in the middle, coming up at this 2909, 2920. And then, of course, the fresher area is going to come up into that 60 demand zone up at the 2940. So that will be higher. And down below, the lower, these have both been touched. So I would imagine if we do have for whatever reason, have a strong fallback down into these two zones. This first one did touch pretty deeply and then into overnight zone. The second one also an overnight zone. However, it did touch lightly. So it's something you can watch if it should come down a little bit lower. But for right now, these lower areas have been tested. This also has been tested. So unless new demand forms, you could definitely look at that as prices start to, if it starts to take out this supply. That's the other thing you can do too. Okay. You remember too, if you take a look at so when markets start to, say for instance, bottom and all, and they start to turn, you do require pretty big volume for people to push prices through and push it up. However, for it to continue a rally, it really doesn't need the same volume anymore. If you take a look, a lot of times when stock market tends to make that new high, they don't need a lot of volume. They just continue to move, and a lot of times without people. So once it gets moving, it can continue to move higher without great volume in there. All right, so now with the SPY, so with the SPY, we've held down into the 240 demand, and now you can see up above, this is where the gap is going to be. Now this is going to be within that same range that we were talking about, right? So this is that 290.59 to 290.24, and that, like I said, is going to be in that same range. If we want to go into the fresher area, that's going to take us into this 60-minute, which is up at the 316 to the 308.36. And if you line that up with the S&P futures, that's going to come into that 3,000 mark, that 3,017, right around in there. So that will be our fresher area in terms of supply. Okay. All right, let's move to the Nasdaq. Okay, so you can see the Nasdaq as well. It also has come into an overnight area already, and pretty much touched that first one. I do see another little overnight. Probably a little bit better to see it on a 10-minute. So you do have a little bit of an overnight that's right underneath at this 88.50, and then more of a day session demand coming in at 87.54 to 87.33. And on the supply side, yeah, I don't see much fresh. I mean, even this, still, it looks like it's fine, but it is inside of that move from the 240, remember, right? So this move from the 240 zone that we've had. The only issue with this one now up on top is it's going to be within that area. So the level looks fine. It's just where it's located makes it just slightly a little bit less. And if you come up a little bit higher, then you're going to go up into your gap areas. So your gap's going to be coming up closer to that 9,500. Okay, now, okay, so now you can see that I don't believe there's too much new inside the Qs. We went over the Qs yesterday, so it looks pretty similar. Nothing too much new with there. So we'll just, we can move on to the next one, but you can just see that same thing We've fallen off of the 4 hour. Now, the Nasdaq's usually going to be the stronger market just because of the tech and the FANG stocks, and with the earnings seasons and all that. And even though it wasn't that great, but considering what's been going on, they're still doing better and they will recover faster. And a lot of people are online, so a lot of things involved with it. So usually they will outdo the others. But they can be also the first one to sell off in a pretty big move too. But you can see just what the Qs look like as well. And so I don't think there's a whole lot new to look at with the Qs. What you do want to do is, if you are trading those stocks, you do want to pay attention to it, especially if you start to see strength or weakness, whatever it may be, that you want to pay attention to this. We do know that we do have some close demands in some of these markets. You can see even in this 10-minute area down below. So if you are trying to go against it for whatever reason, then you must pay attention to these, where the Qs or the Nasdaq is, if you are trying to trade the stocks. All right, let's move to the Russell. The Russell is still the small cap, still the bit of the weaker market in general. It has been rallying off of our 240 zone, as you can see. Nice, pretty strong rally off of that overall area. Has the other 240 still underneath it, down at the 1215 to the 1203. Sam is here. He can answer. I got plenty of support going on in talking, so I'm going to concentrate on the charts, and you'll get sure good answers coming in the chat. So let's see. Let's take a look at this Russell right now. So Russell, like I said, was still the weaker market. And you can see up above where we've so this area we've missed last time. So this is kind of telling me it's still weaker than the rest of them. It can pick up some steam, but the small caps look like it's not as strong as the others, because this is just really an overnight that price missed. Nasdaq went, just way above it right now. Russell is still it came into it, fell below into the overnight demand, and then now we're right back into it. So the Russell is still a little bit of the weak link in comparing to the rest of the markets. So you can see pretty much came back to test the overnight demand so far. Up above, we still have the 2 that's inside of this range. That's coming in at the 1308.80 to 20 to 1334.70. Okay. I think if you follow your plan, no matter what it is, because, okay, I'm going to say this right now. Trading is always going to make you mad, no matter what, right? So you have to get to a point where you say, listen, I'm doing well, and accept it. Because what happens is, when you first start out and you're losing, so of course you're mad about that because you're losing. Then you start to level out and you start to be, break even, perhaps a little bit profitable, a little bit not profitable. And then you're mad about that because you're not where you want to be in profitability, or not quite yet in getting straight to break even. So you're mad about that. Once you get into profitability, now all of a sudden you're saying, well, I should have, I could have got more profit through this one. I should have did this. This one now ran another, 300 points. And what I'm saying is, you will never be happy. It's just one of those things, because if you want to say you want to pick every single move in every single market and get every single tick and every single pip or cent, you're just going to be completely, mad all the time. And that's not really a good way to live your life. So have your plan, know what type of trader you are, know what you need to get to your goals. and then stick to your plan, right? A lot of times what happens is you start switching things around, right? Oh, no, today this didn't work, so let me try that one. Oh, okay, tomorrow that one didn't work. Let me go back to the other one. And then before you know it, you're all messed up and you're all over the place, and nothing's working anymore, right? If you find something working, that's another thing too, because I was guilty of that too, where you find something working, then all of a sudden you said, well, I can do that much better doing it that way. Then all of a sudden you change whatever you had that was working just so it can work better another way, and it really wasn't better, right? Get to be a master of what you are best at. And once you are a master of what you are best at, if you want to branch out a little bit, okay, branch out a little bit. Do it in another account, do a little bit more testing, but don't try to jump all over the place. Be happy. If you're starting to gain that starting to get out of that break even point, getting to profitability, and then you start to, get a little bit more, you can always add a little bit more size on, you can always do different things. You don't have to change your whole game just to try to start over again and then create other issues. So that's just my 2 cents about things, just because I've been there too. Been there, probably been everywhere, but I've been exactly there as well. All right, let's go to YM. Yes, absolutely. It is human nature. Human nature does want more, 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 more. But I always say in the beginning, especially, your biggest loss comes after your biggest win. Only because it's just, you feel like you're on top of the world. Nothing can beat you. You are better than the market. You are better than any other trader, investor out there. But then that's when you start to, get a little loose in your rules. You start to do a little different things, and then before you know it, you have a much bigger loss than you expected. So always keep humble the best you can. You're gonna always be happy when you have a win, be sad when you have a loss, but don't go yell at people and be mad at your animals and things of that sorts, because and don't be euphoric either, because bottom line is try to keep as much of a robot as you can. I know it's hard in the beginning, but that's going to help you out a great deal. You can see now with the YM also, we came into our 60-minute area, and also came down into a little demand. And so now what I do see is all we do have is these overnights above, and we've hit into that first one. Second one is still there, but it is overnight. The fresher area, which is also in that big range, is going to be coming in at that 24,576 to 24,718. If we should have a move back, we have these still fresher lower demands, which is lower at the 22,206 to 22,063, and then there's another level right underneath that too as well. Okay. Trading makes you learn a lot about yourself. Things that it's hard to, you may think you follow rules well, you may think you do, but really it just tells you a lot about yourself. I mean, You can be setting up a level, and then once it starts to get there, then all of a sudden you become not sure. And then if you really, because a lot of you, okay, I don't want to put it in because I don't know, I don't want to put the risk on. So then you're trying to watch it and you're trying to watch it, and then it's getting close, but it's not quite there yet. And then of course it makes you nervous. So of course all of a sudden you need to go to the little boys and girls room, and then of course you come back and you missed it, and then you're like, wow, why didn't I just get in? And so all these things start to pop up once you especially in the beginning, and for some of you it's gonna happen a little bit later on too, because you have other issues going on, but try to keep it as even keel as possible. The other market we also had was the Nikkei. Nikkei came up into the level overnight, and I did have another level right up above, but I noticed the 4 hours, so I moved it. I moved the upper level because this area is within the 4 hours. So this level, you can see we hit up into it overnight at the 19,688, 19,7. Just out of curiosity, if you guys want to put in, if any of you were short the equity markets and any of you that were long, I think some of you wrote that you were long, you got out too early maybe, but just out of curiosity, what did you take? How did you do? If you did take any of them in any of the markets, whether it be Nasdaq or Nikkei or S&P, while I continue on. So now you can see, because the Nikkei was coming off of our 30-minute zone, hit up into our 30-minute supply zone. Now, like I said, I moved it up a little bit higher, not higher, but because the 4 hour includes the whole area. So now this one, again, inside of that overall range, 19,914, 20,064. All right, excellent. Good. Nice job. Yeah, equity markets in general, I mean, look at this. I mean, look, we are not even anywhere near out of the gate yet of what's still to come in terms of the economy wise. But as long as there's some hope, right? What happened? California is going to open. They're Trump's also, trying to blame more people. So now all of a sudden, like there's some hope. Is this, this Gilead trying to do things? So it's like a little bit of hope, and then everybody wants to try to buy. So it's naturally, designed to try to go up, even though, you don't need all the evidence. You just need a little bit of hope. But anyway, so now this is what's going on at the current moment. And of course, once we break this supply, then we'll see if this can possibly form a little bit new demand too as well. But that's what we have on the Nikkei for at the moment. Okay. Now let us go to, before I move to the other, I just want to take a look at a little bit. I know somebody before did mention wheat, but I noticed some rollovers happening, so I decided to stay away from it for the moment. But we'll look at just quickly before I move to crude. Where did it go? So it does look like we are kind of down into this area, into the monthly. We did have one hit in it and started to roll out. I mean, we do still have some close supply, but you can see where we are in general with soybeans. This area here, not your first time, but it does look like it still can give you a little bit of a move. The fresher area is still going to be higher, way up into the 880, but this is a closer zone right now for the first supply at the 848 to 853. All right, let's move on to crude. So crude is seeing its biggest rally yet ever since we had. So took about not the first day, but the second day, that second capitulation where prices really started to come out again. And what we're seeing now is we're continuing to form some demand on the move up. The overnight levels, you can see it tested pretty now deeply in. We've bounced off a little bit overnight, but now you can see we form new demand as we continue to move up. We're pretty much holding above this 240 zone right now. And really the fresher supply is coming up way higher because you got a big gap involved there. Because these are all overnight coming off of this area. But the fresher supply is really coming up higher, closer to this 41.80. Let me open it up a little bit more. This 41.85 to 42.75, and then the 43.42 to the 44.68. On the close end, we do have some 30-minute areas. First one was tested once and isn't overnight. Still looks okay in general, but if you want to wait for the fresher one, those are the two lower ones. So the first one's coming in at this 21.42, 21.10, and then the two fresher ones is coming in at 20.85 to 20.59 and 20.33 to 19.96. Okay, so that's on crude. Just going to take a quick look at nat gas if something. All right, so nat gas, we've been waiting for a while for it to kind of break out of that range. It finally did on the daily. Right, it finally did that pop. It took a while, was a little bit of back and forth. Now it finally did pop out. We did hit a 30-minute area, but right now on the close end, we do have some close areas where we have a 5-minute area down below at the 2031 to 2015. And then this little gap up overnight at the 1977 to 1937. Oh, actually, and remember yesterday when we were talking about the bonds, right? So this is the look of the bonds yesterday where prices had trouble falling through there. We did hit the first opposing demand at the current moment. So now you can see where we're right at right now, just like with the equities, it's right stuck in the middle. So is the bonds at the current moment. The fresher demand is still lower, but at the current moment, it's hit up into this first demand and then now retesting the same area again. Inside of this range. So not too surprising that we are seeing this picture as we are seeing with the equity markets. Same thing with TY. TY you can see as well falling off of our 240 and still above our overnight 240. And now you can see we are just caught in between. So we hit this area. One thing I would look at is perhaps the newly formed one if it gets through supply. But right now, let's take a look at what's up above that we could take a look at too as well, which is, no, not 60, 30. So this is going to be within the range. This is not I wouldn't consider a fresh area, but we did have a strong move out. So I would look at it just one more time to see if we do come back, that we still have some weakness inside that overall. It's going to be underneath this whole 240 though. So just so you know. 30-year is still your weaker market, like we said, with the rates expecting suggesting that prices are going to go up. Interest rate will go up in the longer run. So we did finally break through the 240 zone, and you can see we started to fall back. And now let me just see. I didn't put into the, hang on. Yeah, so same area you're going to have inside of, not your, you can see it's not great in terms of where it is in general, but because there is a strong move out, we'll keep an eye out on this general area. The lower, I believe the lower demand, it's almost back to the same demand where it rallied off from last time. It just touched it and left, so it looks like it's still decent. And then the lower one is actually an overnight zone, that's coming in closer to the 178, 177. Yeah, overnight we did have some weakness inside of the DAX. Still didn't quite, it's rebounding somewhat. It's still far away from its gap area, which is still, quite a bit away, as you can see. You can get there quickly, DAX can get, but we did have initially a little bit of weakness with the German judges over the legalities of the ECB stimulus. So now they have the ECB has 3 months to fix it. And that gave some of the pairs a pretty good move overnight in terms of the pound strength against some of the other currencies. But let's go take a look at the dollar. All right, so with the dollar, so you do have the Bank of England coming out on Thursday, and the NFP on Friday, along with also the Canadian dollar also has their unemployment as well. So you do have those currencies that will be more in fact. Aussie did have their statement, but of course not too many changes there. And so take a look at where we're at. Completely, I don't think I need to say much more than that right now. And yesterday, we did have did hold down for this little supply here, but then did form a new supply. And so now you can see we're right in between that too as well. So, formed a new demand. So we held down through this supply for the session, then created that new demand. Then with the news, created that dollar move. So again, very, very, and this area is within that whole 60-minute zone as well, right? Okay. Yeah. Well, if you have your 4-hour zone in the middle, it's not really quite, you're in the middle, you're not having a great supply demand imbalance, because what are we seeing? What are we really seeing here? Right? Have we broken through any sort of supply, any sort of demand, right? So even if you're finding, say for instance, a 4-hour zone inside of there, is it really, because we have all this trading, right? all this trade. Remember, prices only stay at your extreme levels, right? At your supply, your fresh supply, fresh demand levels for a short period of time. They only stay there for a short period of time so that if it were that easy, everybody would be in it on both sides, right? They stay there so short because there's such a great supply and demand imbalance that it can only stay there for that amount of time, and therefore you have to be, on top of your game. You have to be quick and you have to be in it in order to get that move. Otherwise, prices fall or rally very quickly from there because of that reason. Once you start to, okay, I'm removing some buyers, I'm removing some sellers, removing back and forth, then you start to get this look of things. And that's why when you're trying to do things in the middle, if you ever realize you're getting chopped up, some days you may be like, wow, this is great. I'm buying as we're close to demand. I'm selling as we're close to supply. Oh, everything's working out just smoothly. Then all of a sudden we fall into this, range, and you're trying to do the same thing, but there's no, you're right in the middle of the range and of the white space. Now, all of a sudden, you're getting chopped up on both sides, right? And if you realize that that's happening in your trading, then you need to, expand, take some higher time frames, look at your charts, look at where we're really at, and you can completely stay out of this because it's in your trading plan to say you're going to stay out of it. If you're trying to trade short term, take the first opposing area. Don't try to be the brave one to try to figure out where this is going to go, because I'll tell you, a lot of times this is what happens is, you're sitting there and you're like, okay, I'm short the dollar. It looks like the pretty good area. Okay, I know it's in the middle, but it's okay. I'm short the dollar. And then this happens, right? And then you're like, okay, this was my target, but I don't know. This looked like it's gonna break. This is the time it's definitely gonna break, And so then you say, well, I'm gonna move my target. This is my target, but this is so fast. I am definitely gonna move my target. Then you move your target to below to the next fresh area. Then all of a sudden it starts to bounce, and then you're like, wait a second. No, maybe not. Then you're like, oh. And then it starts to come back. Then you go, oh, yes, it's going to go down. Yeah, I'm going to leave my target there. And then before you know it, now you're already knocked out, break even, more than likely. So, you got to be careful when you're in this spot because it's just showing you there is no clear imbalance. So if you're going to take a trade, I would suggest, sometimes you are lucky and you do get the break, but, more often than not, you're not going to do as well as you plan to anyway. So anyway, that's the look of the dollar. So that's going to make the euro continue to be difficult inside of this range. But let's go take a look at it. All right, so the euro, well, it formed this overnight. Actually, I thought it wouldn't come back beforehand, but because of that news event, it did come back. So we are stuck between these two ranges at the current moment, which is very, you can see very, very tight within this overall, same thing. Overall area here. So I would just say be careful in general with the euro. This area does look like it just barely missed, so you can get one more move into there for a move back up. But like I said, not your greatest.
Sorry, I couldn't quite hear.
Not your greatest, yeah. Let's take a look at. So I know some of you were short the Aussie, then some of you were long the Aussie. And is anybody still in either? You should at least have taken, because we did give profit targets. So on the short side, this was your profit target on the first end if you were able to make the second one. So perhaps whether you're trailing some more. And then some of you, I believe, turned around to do the long side too as well. So we have continued to move up. You can see that news also brought things back down, but you did have some demand right underneath. Now we were starting to move up. Now you can see the supply in the middle of that overall range is going to be up at the 64.85 to 6,500. You know what it is with the overall commentaries? I mean, I spent the majority of the beginning of my, because Asia, London, New York, they were all, very volatile at the time, back in that 2008, 2012 period. And so I spent my time trading mostly actually Asia and Europe and some of New York, because it was too much to try to go. I pretty much was done after Europe close, and which is about 11 a.m. Eastern Standard Time. So if you want to say the person that really been through every sort of possible trading, whatever you may call it, I've done it, I felt it, I've lived it. So there you go. Round the clock trading, that'll do it to you. So here you go. That's the Aussie. Same thing with the spot market. You have the same exact, right? Spot market. These are the numbers for the overall spot market. Same look to it. I will say the Aussie is tracking a little bit more of the equity markets because it does seem to benefit more as the economy gets better. So I would keep that in mind, in terms of how you think of the equity markets for the moment. It's not always that way because the Aussie, remember, was very, very weak at one time. So for the moment, so what I usually try to do with correlations, inverse correlations, is I try to see if it relates to something for the week I'm looking at, the day I'm looking at. And for what I've seen lately with the Aussie, because they have a lot to do with China and getting back in on their feet and everything, Kiwi, Aussie, they are tracking very much so the index market. So if you want to think of it in terms of that, be a little bit more careful right now on the sell side than you are on the buy side, just because like equity markets are also on the strong side. So okay. And the Canadian dollar too as well, been falling from our 60-minute zone, but then now it's hit up into a nice little rebound back from, because crude is getting that rebound. So this area that we've had too, again, any of these zones that I'm giving you inside of it, it is going to be in the middle of the fall, right? So take it for what it is. If there's any opposing zone that's created as it arrives, just realize you're more or less going to have to respect that zone too as well on the opposing side. So, with all of this is, if your trading says, no, I'm not, I don't want to take it in between. I took the extremes. That's going to be your best bet, right? You're going to take the extremes, whether you're taking the smaller time frame or higher time frame. If you're taking it at the extremes, you're going to sell even at the smaller time frame closer to the higher time frame supply level, or buy the lower time frame at the higher time frame demand level. That's going to be your better bet. But if you start to get in the middle and then you start to do little things here and there, just realize it. Pay attention to what your opposing zones are, and don't take them for granted, right? And if it's if it's not within your plan, then stay away from it. Let's just look at a couple of stocks. And don't forget too, we did keep in mind the VIX. The VIX did hit our supply zone too as well. Where did the VIX go? Come back here. I know it's here somewhere. Oh, it's probably down by the stocks. That's why. I grouped it up with them. Did I look at? Oh, let me see before I move there. Did I have anything special in GC? Let me just see. GC is very range bound too. Yeah, I would say GC is like the rest of markets, just like this. So it's another market to be careful in. You know, just like with the dollar, just same thing with GC right now. Of course, it can be a safe haven for if stocks start to fall, but with stocks rallying, it's at the moment it's seeing a little bit of weakness because you have both the dollar and stocks rally. So you do have a little bit of weakness. But in terms of do I see great weakness with it? Not quite yet, because you can see we're just inside of an overall range again, as with the rest of the markets. Oh, copper. Copper was the one. So copper. So that day we were a little bit late to get this big move that we went into, but we did come into these two levels here. And so you can see it came down into the demand, did test back into it, and now we hit up into supply. I don't know if anybody was able to capture some, but I know the range has become tight here. So for some of you, may not be worth it, but you can see that we did move from supply to demand inside of that overall move. Now this higher level is going to be within that larger range as well, and that's coming in at 23.71 to 23.85. Okay. Well, one thing I do know is if I experienced it, more than likely a lot of you have experienced it or experiencing it. One thing I will say though, it's easy to, it's easy to a lot of times, and believe me, I had definitely so many weeks where I would just say, I would be like, "Oh, this is the best thing ever," and then the other times I'd be like, "I'm quitting," and it's just so much, it plays on you, it plays on you, but in the long run, you just got to remember, keep it cool, keep going, and persevere. Again. So the reason why I'm not going through these markets, you're asking about the pound and yen, because take a look at them. Just look at every single one of them. All we're doing, same thing with the pound. All we're doing is keep hitting that 240 zone and falling. Swissy, we hit the supply again, falling in between the two. There's not a whole lot to say with these markets at the current moment. But when there is, we will definitely be on it. But you can just see all of these markets is the same exact thing, right? In between. If you play the ranges, great. But right now, this is what it looks like. All right, so just keep that in mind. If you're doing a little bit of day trading, fine, but just keep it in mind. You don't have a pure direction at the current moment with these markets. All right, so let's look a little bit at stocks. So let's make sure our Nasdaq is still fairly strong first. So with these stocks, you always want to match up with a little bit of these markets too as well in terms of strength or not, because if you're trying to buy at some of these 10-minute areas, you want to make sure your cues are fairly strong and that's not collapsing. Because there's a couple of 10-minute areas in some of these stocks. You can see on Apple, there's a 291 to 289.90 on demand side. Same thing with Cisco. You also have a 10-minute area. 4112 to 4099. We have a Facebook on a 60, which is going to be the gap. So more than likely it's not going to be there right now, but you can pay attention that there is a gap. How about HD? But one thing I will warn you of coming into today is I think I might stay away from this one. I don't really like the big, tell me a lot of the big wicks that's coming in through them. I think I'll stay away from this one. One thing I will say though is we are going to be opening quite a few gaps is what I noticed. We've tested them overnight, so I'm going to go to this page and show you. But it is something to pay attention to because if we look at Boeing, Disney. Oh, let me go. So you can see here we're up into these areas, Boeing, Disney. So it is something to pay attention to that we are up inside of these gaps. Right, so Boeing's going to be opening up inside of this gap. Disney also going to be opening up inside of this gap. So the initial open, you may want to pay attention to because those two are going to be opening up into those gaps. And then there's a couple of them that's a little bit higher, that we have a little bit higher. Intel, JP Morgan, 3M, they also have little bit gaps a little bit higher. But just so you know that we are opening up into Boeing and Disney up into those gaps. We've hit them a couple of times overnight, but once we open, we'll be right up in there as well. All right. Yeah. Okay. So that is good for today. So excellent for those of you that got in some of those areas. And again, if you liked it all, hit the like. If you didn't subscribe yet, please subscribe. And, oh, the wrong one. And if you want to keep in touch with our new venture, support is definitely helping a great deal with making sure everybody gets answered and everything. So keep it coming. And great to see you all, and hope to see you on Thursday.